Ladies and gentlemen, JDew and Jonah, the banking bros in the cash compound, here to help you understand the 3-cup setup. And this video is all about cup number 2. Jonah, what's cup number 2?
It's going to be our cash value. Our cash value available, the money you get to take and spend and use. It's the most exciting cup for sure.
Hey, what's up everybody? JDew and Jonah here talking about cup number 2. This is the cash value cup. So if you've seen our other videos, check them out. We've got cup 1, cup 2, and cup 3 in the 3-cup setup here. Premium, deposits, cash value, where we're headed today, and death benefit. So Jonah, a lot of folks don't understand the value of what's going on in the cash value cup here, and they don't know how it can be used. If your policy is from the right place, set up with the right professionals, this cup is magical. Tell us how we get to this cup.
Yeah, so cash value is kind of what that's what drives most folks to get started.
Yeah.
Right? Mm-hmm. And so it's very, very important that you understand kind of how we relate the information and how we get here, right? So you're probably realizing that what we teach, what we talk about, what we make videos about, if you're watching, is banking. The action of what you do after you have one of these policies set up.
Oh, yeah.
So after you have the product, now take action with the product. What do I actually do? And so how we get to cash value is real simple. Now, we're only going to talk really and hone in on cup number 2, cash value today, but we've got to tell you how it relates to the other two really fast. So anytime you get started, you actually get to choose your premium deposit, what you're going to put into your banking system. So for today's example, I'm going to drop in a few 20s into that policy, into that bucket here. And once you do that, the insurance company actually funnels money into the other two. So cash value is the money you can take out, spend, use, buy stuff, pay stuff off. And it's important to understand that the insurance company put the money into this bucket.
Right.
Now they put money into this bucket based on what you put into your premium deposit.
Right.
But it's still their money that they put into this pool, this bucket, this cup.
Yeah.
And so this is the money you can take out, you can spend, you can use, you can do really cool things with, and it gets really, really fun and lucrative if you understand how powerful it is that mine's still here and still earning.
So once again, let's back up 1 second to make sure you understand. The product that we're going to use is a whole life insurance policy from a mutual company.
That's right.
That pays dividends. So you have to have the right company and product in place first. So we've already vetted all those at the Cash Compound. We'll help you with those. Secondly, most folks don't realize that policies are not just buy off the shelf, one size fits all.
Right.
They can be engineered by the second P we talk about sometimes, the professional, and how they work and how they grow. So we are going to designate these policies to have a ever-increasing and early cash value available for you. So we say early, a lot of times people are wondering like, hey, well, I know a little bit about life insurance and I'm wondering about this cash value idea because don't you have to wait years, maybe like at least 3, 4, 5 years, right, before there's anything in this cup.
Right, and that's just not how we design the policies. So when we say you can get to the access to the cash value immediately, we're talking right away. So a lot of times we like to just generalize that and say within 30 days you can get to it. So we're not waiting 2, 3, 4, 5 years. We're talking about this month. You can go ahead and take this cash out and start using it.
So once again, you need to work with the right professionals to be able to set that up. Okay, so Jonah mentioned that we've got that cup. We've also got the death benefit cup. Remember, at the outset, any life insurance product is going to have a benefit here for your beneficiaries. The insurance company takes care of that, and they are going to have that ready for you in a whole life policy the rest of your life. It's going to go off one day to your friends, family, church, or charity. So that's what's going on over here. But now we're going to hone back in on this cup. Now, if you've watched our video about cup 1, the premium cup, you know that something very magical happens when money goes in there. Remind us what it is.
Yeah, the first thing is that the insurance company is going to pay interest on this cup. This is where they're paying you interest on the money you put in. They're also going to give you a dividend on this cup once a year. They're going to give you a bonus on this cup as well. So anytime you put money in here or your annual renewal hits or whatever it might be, these cups get bigger. The ones that the insurance company is funneling their money into and they're taking care of, those cups get bigger every time that happens. So that's really awesome for cash value. One of the things we like to talk about sometimes is our save and spend method.
Yeah.
We talk about how you can save your money here, but spend their money here, right? And so that is you saving your money in the premium and spending their cash value. The cool thing about it, and again, this is, I mean, so many people are lost at this part that I want to just hone in on it, right? If you take money out of the cash value, money out of the second cup. Did anything happen over here to this first cup, this premium? Nothing happened. You didn't take any money out.
We did not interrupt any of the growth.
You didn't interrupt your compounding.
So this is how I might say it. So you see, he's got worked up for a second, all right?
I did.
All right, so this is how I might share it with someone who's wondering what the heck is happening, is that if you and I, in a traditional banking environment, ever since Grandma took us down to the bank when we were 12, when we pull money out of the bank, we're pulling out our money.
Right.
That's called a withdrawal.
Right.
So if we withdraw the money, whatever growth or anything special that was happening for us with this money goes away.
Right.
We took it out. We had to spend it. Of course. Nothing wrong with that. We're just helping you understand that this money was not our money. Our money's still compounding and growing. And secondly, when we take it out, it's not a withdrawal. This cup will still compound and grow. Ladies and gentlemen, that's awesome. But Jonah, you got to explain to folks now, because some folks are ready for level 2. When we take money out of here, if it's not ours, that's called borrowing.
Sure.
So what does that mean?
Well, it could mean a lot of things, right? Now, normally when you hear the word borrow or loan, people assume, oh my goodness, that means I'm kind of subject to paying this back. I'm going to get billed.
Right.
I've got no choice type idea.
Of course.
Right. And here's what I have to say to that. Well, that's how it's worked up until this point in your life. But this system is owned by you. You're the owner of this system. You're the owner of this bank. So when you borrow money, you're actually borrowing it from a bank, a system, a policy that you're in charge of, that you control. So you absolutely can pay the money back. We're going to teach you to pay the money back, but you're not forced to do that.
No terms, no conditions.
The reason you were forced, again, the reason you're just associating the word borrow, associating the word loan with negative things, is because you always borrowed or took loans from people who weren't you. Right?
So there was,
so if
made
you
you sign
borrow
the
or take a
paper.
loan from me, I'm going to put some rules on you. Right?
Right.
I mean, plain and simple. But if you borrow and loan from yourself, you can do whatever you want.
So what he's trying to make sure you understand, ladies and gentlemen, is when you borrow cash value, we had to rethink our minds as well, is this money can be paid back, but it may not be paid back. You're in charge. You control and own what happens here. Now, there's some things that happen to this cup, actually, when you borrow this money. Not this one.
Not this one.
Yes.
That's
not this one.
Not this
Not
one.
cup one.
That one,
okay,
yeah.
But remember that this is basically, you can think of it kind of like equity value, like in a house, right? You can borrow against something that we're borrowing against, the collateralized policy that we've got here. So if we borrow this money, it's actually a temporary prepayment on the death benefit, right? So this is money over here that the insurance company has allotted for our friends, family, church, and charity one day when we graduate. We tell you that all the time. And if you take these dollars here, one of the reasons you don't have to pay it back is because even if you didn't pay it back and died, what happens, Jonah?
They would just subtract exactly what you took out of the death benefit. Exactly what you took. Now I want to take it a step further.
Okay.
Because we teach payback. We always do.
We do. Yeah, we actually
Let me ask you a question, right?
Yeah.
Up until this point, I'm just going back to my statement here. Up until this point, when you borrow money from your family, your friends, the conventional bank, and you have to pay them back,
right?
How much money do you make if you have to pay your car payment, $500 a month? How much money do you make?
None.
But watch this.
Okay.
You borrow money from yourself and take money out of your own cash value, and then you pay yourself back.
Okay.
How much money did you just make?
None.
You still got your same amount. You still got your $10.
Yeah.
You see the difference?
Yeah.
The difference is if I borrow money from you and I have to pay you back, I've got nothing.
Right.
If I borrow money from me and I pay me back, I've got $10.
There you go.
So people complain all the time, right? They have this negative connotation about, oh my goodness, I'm borrowing, I took a loan, I have to pay back. But you're forgetting you did all of that with you in the captain's seat, right? You were in charge. So you're complaining about paying back when paying back actually doesn't even mean you lose $1.
Right. Love it. So here's another thing we want to help you understand, ladies and gentlemen, that we have an ever compounding cup number one.
Yep.
Right? The values that this is going to grow to then, that's accessible here, end up being larger than what we ever put here. So remember, Jonah said that there's an ever increasing compounding rate written into your contracts when you first start. Before you even start, they wrote it on day 0. You signed it and sent it off back to them. They're going to allow cash value. We're going to allot it for you in our design of the policy right away. But over the course of your life, if we're not withdrawing this money, that means our compounding curve is going to get pretty significant.
Going up and up and up.
And what happens after a few years in the game, ladies and gentlemen, cup number 2, the available cash is larger than the money you ever put in here. Second reason, not just because of compounding of your dollars, is because Jonah mentioned the dividends that we elected for the insurance company to put in here was more money that went in here. We didn't even have to do it. Isn't that great?
Right.
I mean, they're going to do more for us. So, ladies and gentlemen, you have got to remember that this money here in cash value is what it is all about. Throughout your life, we're not doing things the traditional way here, where you needed death benefit to protect someone. It's there. It's available. It also grows every year based on your money and dividends. We're talking about the cash that you need while you're living. So sometimes it's a completely backward way to look at a general life insurance contract. But we think it's very forward thinking, right? Where typically we've been sold on the idea that, hey, it's just to protect folks. And it's working backward. The last thing I want to help people understand is, Jonah, I get questions all the time about cash values like, hey, what's the interest rate here? Like, is this a good investment for me? And so, like, how are you helping people understand, like, when they ask you a question like, well, I mean, people tell me it's not a good place to invest money.
Well, sure. I would ask you what money we were investing. Which cup is the investment here?
Well,
because an investment's going to imply a buy and hold type idea.
a waiting
right?
period.
Yeah, like a waiting period.
Right,
Like I put my money in, and sometimes you have to give up control of it, like you don't have it anymore. Someone
Right.
else is managing
Well,
it.
we do have it. We own this policy. And
Right,
we control.
but investment implies I have to lock it in, right?
Right.
I got to sit it there. I can't touch it. I can't use it. I hope it grows, right?
Yeah.
We hope it grows. A lot of times they don't have guarantees on it. I hope it grows,
Right.
but I definitely can't use it. I may or may not can get to it within the time period. So I would say that's an apples to oranges scenario that you're asking about. Because when did we do that?
Right. Ladies and gentlemen, remember that these cups are all yours. You own the policy. You can take this for whatever reason. You have 100% access to the cash value. It's not based on a business plan. It's not based on a credit check. It's not based on to a loan officer or anything like that. You're contractually obligated to be able to use this for any reason. We told you that it will grow well beyond what you ever put in Cup 1. We just got to get it started. And you have the ability to take this out and invest it wherever. So this is not the investment. This is the place where we house the money. The cash compound system is where we've got the money ready, growing, and available to us, and you are still free to go out there and invest however you seem fit, but you're not putting your money at risk. There you have it, ladies and gentlemen. For more information about what we do at the Cash Compound, click our other videos, get on our calendar. We want to help you and answer your questions. There's no pressure from us. Watch our other 2 videos about our Cup 1 and Cup 3, and we'll talk to you very soon about saving and spending at the exact same time.